I step over to introducing our next speaker, Sally Bridgeland. Sally is the chair of the Development Bank of Wales, the Nest Invest Limited and Belvie Care. She is a non-executive director at its Insurance Pension Insurance Corporation, the PIC, and Intact Insurance UK, the former Royal & Alliance. She chairs the risk committee at PIC. Sally won the FTSE AIM Net Award in 2023 for her work as chair at Impact's Asset Management Group, and her non-executive portfolio has also included roles at the Nuclear Liability Funds, the Nest Corporation, and Lloyds Bank pension schemes, and as a chair of the first local government pensions pool, Local Pensions Partnership Investments Limited, and more recently, the Brunel Pension Partnership. She was CEO of the BP pension scheme in the interesting years of 2007 until 2014, after 20 years with Aon Hewitt, working as a pensions consultant and in investment research and innovation. She's an actuary and a mother and a passionate about responsible investment, cycling, and inclusion and creativity. Sally is currently writing a book on the value of getting the club mix right between the drama club and the chess club in business. I'm quite interested in what Sally will present to us. Her presentation, The Drama and the Chess of Insurance Risk Management. Sally, the floor is yours. Go ahead.
Thank you very much, Ron. Hello, everybody. Yes, the drama club and the chess club. So I've promised in the blurb, and this is me being very chess club, very systematic, very careful, making sure I'm following the brief, to look at what I said I was going to talk about. And I think I've recently written a paper. I'm also an honorary group captain in the Air Force, and I've recently contributed to a paper looking at the Defence Review, the demand for the armed forces in the UK to be more agile, to have the risk crisis level creativity, wartime creativity during peacetime. So how we actually think about making decisions and doing those in a way that is creative and also resilient and risk aware has been very important. And it made me think hard about how we think about risk in insurance, and looking at the two different clubs, the drama club and the chess club. That particular idea came to me into my life when I was chair of Impact's Asset Management. We'd merged with a US company, and the guy that was coaching our executive team out in the US said, I want to come over and meet everybody in the UK. And so he did. And he came back to me as chair and Ian, our chief executive. And he said, Sally, Ian, I've met members of your chess club and members of your drama club. And I burst out laughing because I knew who he was talking about. The more quantitative, accounting, financial was who he was referring to as chess club. The more marketing, sales, deal makers were the more drama club. And it just struck me that it was an interesting analogy and something that would be very helpful in introducing different kinds of thinking into the way that we think about risk. And we do already do that in risk management, but I encourage you to think about those two different clubs deliberately when you're thinking about risk, to make sure in particular that we're not overcomplicating, getting too, trying to use sums and maths and models to overcomplicate things that are actually improbable. So those high impact, low probability events were actually a contingency plan, a dress rehearsal, a playing through to see whether it's a happily ever after. That drama club way of thinking about those kinds of risks is actually a more appropriate way of being ready should those risks actually happen. And similarly, are we over dramatizing something that's probable that we should just get on and do something about? And let's not make a mountain out of a molehill. Let's find the things that we can do something about and get on with it. And one of the reasons that this has been a question for me has been on the board of the organisation that's now Intact Insurance, that was Royal Sun Alliance, general insurance, 1-year premiums, 1-year policies, versus the Pension Insurance Corporation, which is long-term liabilities for pensions, buying out single premiums, but for liabilities that go on for 10, 20, 30, 40 years. Does a 1 in 200 stress test over the next year really make sense? It probably does for the 1-year policies. It probably doesn't for Pension Insurance Corporation and the bulk purchase annuities. Just a thought. So something about me. My maths teacher at school, you came from a school where maths was in the languages department. I've always been good at creative writing, effectively, spotting the patterns and the analogies that makes a pure mathematician a good pure mathematician. I'm good at exams. I can remember stuff and regurgitate it out. But importantly, I started working in the days before computers. So back in 1986, very nearly 40 years ago, it was squared paper, large button calculators. I've now got a bamboo version on my desk. We didn't use computers much. And I've moved through the age where you were able to do just about everything you wanted to do on a computer, but it was really slow, to the point where we are now, where actually you can do pretty much anything you want to do on a computer as fast as you want to do it. And the question more is, what should we do and how should we do it? The innovations I've been involved in have ranged across a variety of different things, including using derivatives to manage pensions, the term responsible investment back for a competition in the FT back in 2003. And I'm really interested in how and why we use benchmarks and models for pension schemes. But when I was at BP, there were a lot of things that happened that the models weren't predicting. Even the global financial crisis as an extreme event. We had the Gulf of Mexico Deepwater Horizon tragedy, and we had some pension scheme tax changes, which changed the way that we thought about the finances and how much risk we wanted to take. And in particular, it highlighted the importance of this low probability, high impact events. And let's make sure we've got good contingency plans in place. It's fair to say that when the Gulf of Mexico tragedy hit, thankfully 3 days after I'd recruited a chief risk officer to my team, the only contingency plan I had in place was a laminated card with people's phone numbers on and a bar of chocolate. I still make sure I always carry a bar of chocolate, but it's fair to say our contingency plans developed an awful lot over that year. Expect the unexpected, being a round peg in a square hole, from being a girl that was good at maths, which was not expected, through to being in the Air Force, even though I don't like flying in small planes. That is almost the story of my life. And what's interesting about the actuarial profession is we try to create certainty from uncertainty. And I would challenge that. That's our motto in Latin in the UK. But if uncertainty is helpful, or it's cheaper, or the risks might be rewarded, then maybe we don't need to create certainty. Maybe just thinking through the stories will help. So I've told you the once upon a time, where the drama club and the chess club came from. So thinking about what I ask people is, which club would you rather join? And sometimes it's on the basis of, well, I wouldn't want to join that one, so I'll join the other one. But try and think about how you think about yourself. And it's deliberately playful. It's about clubs. It's about hobbies. It's not about some deep analysis, and certainly not tied to roles or expectations. Anybody who's in the chess club can be in the drama club, and anybody who's in the drama club can be in the chess club. And that's really important. but just thinking about life in a different way with an emphasis on creativity or an emphasis on resilience. And in terms of the chess club in our actuarial work, we started off back when we could do those calculations in a very deterministic way, moving to stochastic, looking at distributions where the individual outcomes are actually meaningless. They don't have a story behind them. They are not a scenario. They're just part of a distribution. And the key elements in the models are assumptions, data, and expert judgment. Those are the things that in the world of Solvency II and the models, whether that's in, and also in pension funds and other investment applications, those are what's important. And I recently heard an actuary saying, the trouble with the world is it doesn't actually comply with my model. And I just thought that was a bit the wrong way around. So challenge yourself when you expect the world to behave like your model, when actually we're just doing a first order, second order, whatever approximation. And actually it's the way that the world might be different than your model that is usually the most interesting thing. And that's where the drama club comes in. So when we're looking at the, how could the story lead to a particular end state? A reverse stress test is a good example. So we end up with doom. How do we get to doom? How do we imagine the story might play out? Stress tests are similar. We're encouraging people to be imaginative and creative without any sense of the likelihood, but just making sure that actually we are using, thinking about what is possible and getting that muscle ready for when there is some kind of crisis. So being imaginative and including a variety of different perspectives. So the kind of workshopping that we did for operational resilience and thinking about intolerable harm, what that means and how we might get there is really, really important, while still being believable, so that people actually take the scenarios seriously. When we think about recovery and resolution, when we think about operational resilience, we're trying to understand what we can cope with, how we can reduce the cost of responding to things, how we can be resilient, how we understand the roles and responsibilities, the things that are actually requiring human thought and intervention and judgment should a crisis particularly happen. And we can also think about the happy ending. And the 3-horizon model is something that the actuarial profession has played around with in terms of thinking about where might the vision be and how do we get there, rather than regarding the future as being just a series of steps on the current horizon, or the current plans and the current business plans, the 1-year version and zero-based accounting and risk thinking. The emphasis is very much there on designing good outcomes and thinking about diversification. The Horizon 2 is much more about just avoiding the bad outcomes. And these things are different. Avoiding bad outcomes and designing good outcomes are the different sides of the coin. However, they are both worth spending time on. And what I've come up with is the idea of club mix questions. You heard it here first. It's a generalization of the pre-mortem question, which Daniel Kahneman uses in his book, Thinking Fast and Slow, which is basically, and it's a really useful question for non-execs to ask around a board table, is, I love your optimism, I love the plan, but let's fast forward 2 or 3 years, it's gone wrong. Describe to me why it's gone wrong. What's the most likely things that will happen that will get in the way? That is the creativity. That's the drama pluck-up piece of the question. And the second bit is, what can we do now to reduce the likelihood or the impact of that happening? And we can also think about, how artists embrace uncertainty. If you want to get really drama club around this, and I've got my book club slide coming up, which will give you some recommendations on things that you can learn if you want to be more drama club about uncertainty. But the formula for the club mix question is have an expansive, creative question, and then follow it up with a tighter analytical question. So you're deliberately switching between creativity and including the unlikely and the fantastical, perhaps, but then tying it back to reality so that both sides of both types of thinking can be used to create better resilience. So yeah, book club. So Margaret Heffernan, who wrote Willful Blindness and other brilliant books, her latest is called Embracing Uncertainty, How Writers, Musicians and Artists Thrive in an Unpredictable World. This is Drama Club meets Drama Club. And it's stories about how in lockdown, when a writer doesn't know what the ending of the story is going to be, when a musician and an artist is mumbling around with an idea and going for a walk, how they work. And it provides food for thought for those of us that do tend to get down in the weeds and very, very quantitative and analytical about things. The book that I'm writing and the cover design is very much under construction. We've got 2 possible designs. And at the moment, people I would call chess club like one design and people I would call drama club like the other design. It is a case study in the diverse thinking in itself. A more chess club way of thinking about creativity would be something like Serious Creativity by Edward de Bono, where you deliberately have different kinds of hats, different ways of thinking, and you work through a process to become more creative and to develop that muscle of creativity that can help you think about what might go wrong and what you might be able to do about it, whether the model is predicting it or not. So the parting thought is the joke about the actuary. The actuary is always right or can prove they are, which speaks to an actuary's intellect and ability to argue for their case. And that's very helpful, but it's not always as creative or as inclusive as we need to be faced with some of the risks that are ahead. Instead, some ingredients like empathy and acute listening. Acute listening is something my brother, who's a car salesman, he taught me this one. Acute listening is where you try not to think about what you're going to say next until the other person has completely finished speaking. I've finished. Over to you.
I have a question for you, Sally.
Go for it.
Yes, because you used to work at BP and now with the RAF. This approach from drama club and chess club, how does it work there if you compare them?
Yeah, interestingly, they're both organizations that have been around for a long time. So the squadron I'm in celebrated its 100th birthday last week. And they're both very hierarchical. And that can mean that, and they're both full of engineers, or even pilots tend to be, it's fair to say, on a spectrum to be able to cope with the kinds of things that they have to do. So they tend to be chess club kind of organizations. So the danger is that they're missing something, or that the relationships are underplayed because the hierarchy and the roles are what's important. So where the drama club was useful there, and it's interesting that I think Shell was one of the first businesses to use scenario testing. We did at BP, in the BP pension scheme, do scenario tests on our pension arrangements, including a global pandemic. So we did this back in well, I left there in 2014, so it was well before 2020. We thought through those kinds of things. So using a sort of engineering stress test kind of vernacular and story was very important. And of course, the military are very good at the wargaming, but it tends to focus on the operations side of thing rather than, so what would we do in a particular situation in a state of war, rather than that peacetime mentality. So that's one of the things that we've been trying to encourage, to think about greater agility. It is, well, let's just work through some scenarios rather than modeling everything and having lots of spreadsheets with the numbers in, which the Ministry of Defence is very good at as well.
Yeah, yeah. I picked up two elements in your presentation. The element of creativity in combination with resilience. And I was thinking myself, how to apply this concept, creativity, resilience, how to apply these concepts in RAF as an organization. Are they creative? Are they resilient? Are they maybe I have the wrong picture. Now, then it is you who can giving me the right picture.
Yeah, so I think they are. The emphasis in defence is always in being resilient rather than being creative. What's really interesting now is the pace of change. So, for example, the use of drones and the use of artificial intelligence in interpreting data. The Air Force, 11% of the Air Force are involved in intelligence. Quite a lot are involved in the space domain and the use of satellites and data. So being able to make sense of data and coming up with the stories and the possibilities, I think that's a very creative, you're finding your way rather than following an established game, an established path. There's an awful lot of that having to happen at the moment to do what they need to do on a restricted budget, with global relations and tensions being quite different. That we haven't seen this level of activity and threat for decades or 2 decades. Yeah.
Yeah. What is quite interesting. You explained a bit about your career, about your experience, actuarial work, risk management work. Could you say once again that the traditional, that the junior risk managers / actuaries, that there are a lot of possibilities to go out in the wider fields, to leave their traditional domain, and there's a lot of work to do in other industries. I mean, for me, you are the example of this, but maybe you can stress that again in 1 or 2 sentences.
Yeah, so my strong belief is that you're a better mathematician if you've got a broader range of experience. You've got broader things to draw on. It's like, but I think of maths and modeling as very much a creative process. So my drive for getting more experience has been around, I need more ideas, I need more things to feed on, more patterns to spot. I think the empathy and the acute listening is something that is really, really important to go into other fields. Listening, and more listening is how you learn how to add value. You learn what people don't understand and where they need help. And an example would be the Nuclear Liabilities Fund, and at BP, where engineers do not think about risk and return in the same way as we do. It's not you get rewarded risk taking. It's all risk is bad and we're trying to get rid of it. And it's not that it doesn't matter how much it costs, but actually there isn't a scale, there isn't a conscious compromise. Whereas I think actuaries are better and good at thinking about that trade-off and thinking about whether actually it's it's worth taking some of this risk because the cost of defraying it simply isn't worth doing, because it's low probability, high impact. We just need to be ready when it comes along. So helping in those conversations about the value of risk and the opportunities of risk taking, as well as helping put on a scale the risks that are really worth worrying about and mitigating. I think that falls to our skill set. And if you have those conversations gently and humbly, that's where you can be incredibly valuable.
Okay, thank you. Sally, last question for you. I have. You were telling you are writing a book. When is the publishing of this book, when it is expected?
Well, Bristol University Press have got the 40,000 words they've got by the deadline. So that was the chess club bit. Do the number of words by the deadline with the right number of chapters that I told them I was going to do. They did actually get one chapter extra within the same word count. But and the other thing was just getting the message out there about this everyday inclusion and everyday creativity. So that's with them. So far, so good. We've got the designs of the covers happening. It's being reviewed. Short answer is next summer, in time for Christmas 2026.
Okay. I will look at it when it is available, and I'm really curious to read it.
Lovely. Thank you.
May I thank you very much for this presentation. It was really inspiring for me. And thank you very much for this.
My pleasure. Absolutely my pleasure.